Yeah.
Leo.
Ferry.
Okay. Yeah, saya mungkin ya. All right. Okay, let us start. Okay, good morning, everyone. Hopefully you're happy and healthy. That's the most important one. That's the first one. During this pandemic, you have to wear your mask, stay away from the crowd, and always wash your hand. My name is Ferry Ananto Kusumo. I'm the facilitator, the moderator today. I'm the subsurface professional. And on behalf of IPA, we would like to welcome you today on the virtual talk. It'll be a really interesting talk today. The title is the upstream, let me read it. Upstream petroleum contract system in Indonesia and its future challenges in the energy transition. That'll be a really interesting talk today because we have Budi Aguswidjaja, Djadjuri, as the energy observer and a former VP Finance, Sales and Commercial of BP. Just recently, he took the early retirement. And then today, the summary of this talk is about the upstream oil and gas industry with the challenges and facing of a lot of challenges in attracting new investment amidst the new regulatory environment of the current global trends, specifically during the energy transition from fossil fuels to renewables, which is another part of the talk that we're going to have another discussion. The aspect of this session will be interactive. If you have any questions, please raise your hand, use the chat box, or ask directly to Budi. And then let me read a bit on the bio. Budi Aguswidjaja Djadjuri is a former oil and gas executive with almost 30 years of experience. He recently retired. Budi recently retired from BP Indonesia, and his last role is was a vice president of finance, sales, and commercial. He was also a long-time member of BP Finance faculty, delivering courses on oil and gas accounting, as well as he was active and still active, been active in IPA as well. And then he's been teaching and giving courses in different kind of location. So with that, then we can start. Unless Bumeti, you want to say something, please do so.
I just would like to say good morning and thank you to all of you. And special thanks for Budi, of course, who is willing to give us his thinking about the new era. I think this is a different, today will be a different way of discussion. Please open your mind. Yeah, Budi is not here to say this is the best, but Budi is willing to give us a way of thinking that differently. So use this opportunity to have a good discussion. Thank you all. And that's all from me, Ferry.
Okay, without further ado, Budi, whenever you're ready, you can open your mic and also share your slide then. And then expect questions as well as discussion. Thank you so much.
Okay. Sorry, I have to scroll back all the way. First of all, thank you so much for the opportunity, especially for the IPA, in particular the professional division, for giving me the opportunity to talk about something which I believe is perfect when it comes to timing, right? Because we are in the middle of this energy transition, and at the moment, the Indonesian upstream petroleum contract system is facing a lot of challenges due to the recent, situation and development. The energy transition actually opens a door of opportunities to Indonesia and also to the upstream players. Yeah, so both parties are facing challenges as well as opportunities. Okay, so as I understand, this session is being recorded. Please bear that in mind, and we have the flexibility for all of you to ask any questions during the session itself. But at the end of the session, we would give the space for you to have a Q&A, session. You can ask anything at all related to the topic that we are discussing today. Okay, I hope you can hear me just fine, and I hope you can all see my presentation slide pack. Bisa lihat semua ya, so everybody can see the slide pack?
Yes.
Yes.
Okay, so before I start, I would like to make a disclaimer. Yeah? I would like to make some disclaimer. First of all, even though this session is hosted by the IPA, in particular the professional division, but the materials that I'm going to present today is solely based on research that I have been doing, both on the upstream petroleum side as well as on the renewable side. And for the first time ever, I would like to put both of them side by side for us to be able to see the two major, I would say, sides of energy. Yeah. And why I believe that is the right thing to do is because in reality, there is a transition from fossil fuel into renewable. And in reality, the two are competing against each other. Yeah. And I believe the best way to somehow navigate through all this new development is by making sure that both would actually be successful, because both in reality are needed by Indonesia in order to be able to manage the energy needs in the country. Yeah. Okay, thank you. Let me start with the first one. This is not something new. We all know that Indonesia has been using one particular upstream petroleum contract system since the late 1960s. Yeah. Yes, there were some different variations and hybrids being introduced along the way, TAC, JOB, but in reality, they are nothing more than hybrids, yeah, of the PSC itself. And then in early 2017, the government introduced a new kind of PSC, labeled as gross split PSC. But then again, it is basically a combination of the existing production sharing contract with cost recovery combined with some characteristics of tax and royalty contract system. Okay. So basically, Indonesia adopts a single type of petroleum contract system, yeah, with some variations here and there, and we will see whether it's time probably for a major breakthrough and move to a totally different and something totally new when it comes to petroleum contract system between the country and the investors. Okay. We also noticed that there has been very little interest by big investors in the recent years to invest in new exploration. Yeah, we could see that the government is trying very hard to introduce and open up new bid rounds for new exploration contract areas, but the results have not been as promising as we expected. Okay? And then we also noticed that there are some, discovered reserves which remain stranded and not developed, at least not yet. And that sends a very big message to the industry, right? Especially if the discovery itself is very big. It's a giant discovery, which is not exactly something common, especially recently in Indonesia. And yet, even if you have a 14 TCF discovery in Indonesia, still to progress the discovery into development is still very challenging. Yeah? And that is not a good message to the industry. Some major international and gas companies, we noticed they have decided to exit the country. Yeah, some actually had to do that because their contracts in their PSCs expired. Some decided, willingly, one-sidedly to exit Indonesia, including recently ConocoPhillips. Shell is still trying to divest their share in the Masela PSC. And that is also sending a very bad message to the investment community. On the other hand, of course, because Indonesia is a rapidly growing and developing country, then the domestic demand for energy including especially for oil and gas, keeps increasing very rapidly. If you assume that the economic growth rate would be around 5 to 7% per year, then you would expect that the energy demand would actually be slightly higher than that. Right? And on the other hand, upstream domestic production is rapidly declining. So you have a very, very big problem. So we all know about this, but these are the challenges that we are currently facing, and we have to come up with some kind of a way, some kind of a strategy to address this situation. Okay? And we noticed that the government is doing exactly the right thing, because the government is continuously trying to improve the contractual and fiscal terms, even though the government is not at the moment introducing a totally new upstream petroleum contract system, which we will discuss today, whether it is time to actually move and shift to a different, fiscal regime, if you will. Okay? So you notice that last year, the government introduced a lot of improvements on the fiscal terms, on DMO, on much lower signature bonuses, a lot of improvements, including the profit split itself. And the government is trying very hard to reintroduce and reinstate, for example, the assume and discharge principle when it comes to indirect taxes. Because assume and discharge is something which the investors look very carefully at, because without assume and discharge, then there is no protection for the investors when it comes to government take, real government take, because indirect taxes without having assume and discharge could easily be somehow steered by the government to get a higher government share, without the investor being able to do anything about it. Hence, without reinstating assume and discharge as part of the basic principle of the contract system in Indonesia, then it would be difficult to improve the investment climate itself. Okay. When you talk about the energy demand, then of course you have to look at the bottom line implication to the basically the economy of the country. Indonesia has always been on the deficit side when it comes to the national trade balance for a long time. So in 2018, it was very, very bad, because the oil and gas trade deficit was almost $13 billion. And in 2018, it just happened that the non-oil and gas trade balance was also very low, even though it was still a positive. But it was very low surplus, to the extent that the national total trade balance was a negative of $8 billion, which was the biggest trade deficit ever in the history of the country in 2018. 2019, we got slightly better when it comes to the trade balance for oil and gas. 2020, it was significantly lower, mostly due to the much lower demand for oil in the country due to the pandemic. But if you look at 2021, the deficit got much worse, because in 2021, oil imports, basically imports are mostly oil. We have some LPG as well, imported into the country, was about 25 billion. Export, predominantly LNG, 12 billion. So you have a deficit of 13 billion. Luckily, though, on the non-oil and gas trade balance itself, they have a surplus of about 48 billion, to the extent that the national trade balance was still a big positive of $35 billion, which was the highest ever in the history of the country. Why did we have such a situation last year? Well, first, because oil oil price was recovering, not yet at the level that we have today, but it was still recovering, especially in the later part of the year, to the extent that the import value was only 25 billion. Meanwhile, commodity price, including coal, CPO, and all the other major commodities exported by Indonesia, have significant market price increase as well. So we basically was somehow, helped in this situation because of the much higher commodity price in 2021. But what about 2022? 2022 will pose a significant risk to the national economy, in particular to the trade balance. Why? Because the oil price is very, very high. Today, oil price is around $100, and at $100, you would expect that the upstream, the oil and gas trade balance in 2022 could actually be potentially worse than ever before. Yeah, so this would pose a very big threat to the national trade balance, the national balance of payment, and in the end, the national economy, the stability of the exchange rate of the rupiah, the national foreign exchange reserves, and so on and so forth. Yeah. So this is just snapshots. I will not talk in great details about this particular slide, but the first one is the fact that the investment climate in Indonesia is among the lowest. Yeah, even compared to other countries in Southeast Asia, we have the lowest investment climate. And then you would see on the right-hand side that the oil production rate in Indonesia is declining. Yeah, we got a significant help by Banyu Urip coming into production. Without that, then it would be even worse. Exploration activities in 2014 have been very, very low, and without good exploration activities, you would not expect to have good discoveries. You would not expect to have good projects being developed, and then in the end, increasing production of oil and gas in the country. However, if you look at the right-hand side, the bottom side, we still have lots of potentials when it comes to exploration prospects, hydrocarbon prospects, especially in the unexplored basins. Some of them are in the eastern part of the country, offshore, even deeper. So we have good potentials, but we are facing all these challenges. So definitely we have to do something about this. Okay, this is basically an oil and gas, production and demand profile as per the National Long-Term Energy Plan. Yeah, this was, of course, outdated because this was based on the long-term energy plan produced in a presidential regulation issued back in 2017. But if you look at this, even with some recent development to the extent that the government is introducing a plan, a strategy to achieve 1 million barrels of oil production by 2030, and 12 BCF of gas by 2030, then the overall picture of demand and production for oil and gas would be pretty much the same, yeah, with some improvements probably, hopefully, on the production side, but the demand side would be pretty much the same. If you look at this, then by 2050, you would need 4.6 million barrels of oil per day. Even if we could produce 700,000 barrels of oil per day by then you would have to import about 4 million barrels of oil per day. Okay, compared to what we currently have, which is about $1 million of oil, crude oil import, as well as final fuel products of about 1 million barrel per day today. Yeah, so a significant jump from 1 million barrel to 4 million barrel. On the gas side, of course, we are still exporting gas at the moment. We are still a net exporter, but according to the projection profile, by 2050 we will have to, we will need about 25.9 BCF of gas a day. Yeah, and while production would be slightly lower than 6 BCF a day. Yeah, by then. Okay, this is of course not taking into account the fact that the government is now trying to increase gas production to 12 BCF a day by 2030. But that means if the assumption in the 2017 long-term energy plan still holds true, then you would have to import about 20 BCF of gas, which translates to about 3.5 million barrels of oil equivalent. If you add that to the 4 million barrels of oil, which we will need to import by 2050, that would add to about 7.5 million barrels of oil equivalent of imports. Okay, if you compare to this, yeah, if you import a million barrels of oil a day, that's $25 billion, assuming the exact same oil price. Okay, if you have to import 7.5 million barrels a day, then assuming the exact same price level, not higher, then it would translate to about close to $200 billion. Yeah, and that is very, very frightening. How could we afford to import oil and gas with a value of almost $200 billion? Remember, on the non-oil and gas side, we rely a lot on commodities. Some of them are, mining products, whether it's coal, nickel, and the likes, or even CPO. Right? So if we are not handling both sides correctly, then the economy of Indonesia is under a very serious threat.
What are you going to do?
Sorry, if you could please mute your audio, please. We have background noises. Thank you. So this is a very big threat to the national economy, right? Because we need a lot of energy. Most of them will still have to be supplied in the form of oil and gas. And on the non-oil and gas side, we rely heavily on commodities. Yeah, that's why the government at the moment is advocating very much on industrialization, on developing the downstream side of mining products. Yeah, to the extent that the value chain will be significantly increased, so that we can avoid the doomsday scenario down the road in 2050, or in reality even sooner than that. Okay, so it's a very serious concern. So we have to do something about the non-oil and gas side. We have to do something on the energy side, yeah, including, not limited to oil and gas, but including renewables, yeah, and definitely other sources of energy, including nuclear. Okay, and as I said, the government has this program, strategy to partially address this situation by trying to achieve 1 million barrels of oil production per day and 12 BCF of gas production per day by 2030. Yeah, so the government, along with all the players in the country on upstream oil and gas, are trying really, really hard. Hopefully, we could somehow achieve at least partially these two targets. But if not, then we have to come up with something. But even with this strategy being successful, it would still be far from what we actually need to address the energy situation in Indonesia. Yeah, so this is not enough, and trying to come up with something better than this would not be realistic. Yeah, 2 million barrels per day would not be enough, because we need that. Eventually, we would need like 4 million. Okay? 12 BCF, not enough. We will need 28 BCF, yeah, down the road. So no matter what you do, we know that we have to do way beyond this. And how can we do that? Can we do that? That's basically the idea about our session today. Okay. Now let's talk about energy transition and the environmental concerns. Yeah, you would probably have noticed that all, if not most, major oil and gas companies have the commitment to achieve net zero emission by 2050. Some of them even promise being able to achieve that a bit earlier, probably 2045. And they are facing a lot of pressures. They are all being closely monitored, not only when it comes to their progress in achieving net zero as per the Paris Accord, in which all these companies are committed to deliver, but also from other parties, including NGOs, general public, the media, and more importantly, the market. Yeah. So if they are not doing great when it comes to their progress in achieving net zero objective by the promised deadline, they would be severely punished by the market. And a market punishment of, I don't know, maybe a stock price drop by 20%, that could be 20% of, I don't know, $250 billion. That's a lot of money. Yeah. If the market cap of ExxonMobil is 250 or 300 billion, a 20% drop is going to hurt the company really, really bad. Yeah. So that's why energy transition, achieving net zero is a must do for all these companies. And that fact actually has profound consequences to the way they behave, including in upstream oil and gas. Okay, they shift their focus to new things, including, for example, CCUS, carbon capture, use and storage, or CCS without the usage itself. If you could not use the gas, for example, the emission itself to improve production as some kind of a additional enhanced recovery system, then it's basically CCS. But carbon capture and storage is turning into a license to invest, and we have to admit that. Yeah. Why? Because without doing something about the carbon emission, they could not invest in developing new oil and gas fields. Because without doing that, they would not be able to achieve their commitment of net zero. So this is a fact. And the government of Indonesia will have to accept this as a fact. And as a matter of fact, the government of Indonesia should support CCUS, because without doing that, then nobody would want to develop a discovery of oil and gas fields in Indonesia. And even worse, nobody would want to explore. Yeah, because they know that if they have a big discovery and it's commercial for development, in the end, they will have to do something about the emission. Yeah. If the government is not granting support or probably even giving incentives for CCUS, the CCUS side of a oil and gas field development, then nobody would be interested to invest in Indonesia. Yeah. So the Indonesian government is supporting, carbon emission, management and improving CCUS, projects. For example, in Tangguh, probably they're doing the same thing as well in other gas developments, but it's still on a case-by-case basis. Yeah, and that is not good enough. Yeah, why? Because if it's on a case-by-case basis, then nobody has the certainty that all this carbon emission, mitigation, management, reduction, activities would be supported by the government. Cost recovery for CCUS would be allowed by the contract from the very beginning, from the exploration side, since the day they signed the PSC. After winning a bid round. you have to provide this assurance to the investors. Otherwise, nobody wants to invest. Why would they want to? Because they know that if they do that, they would be far off from their net zero target, and they will be punished, severely by the market, by the NGO, and by their governments. Okay? So they are focusing more on cleaner hydrocarbons. If you have a big discovery, but the CO2 content is humongously high, ridiculously high, they would not be interested at all. It's not worth the effort and the financing to invest. Yeah. So they look at the quality of the hydrocarbon, whether it has low emission or high emission. Yeah. In the past, they paid less attention to that, but today it's mandatory. Yeah. Green operations, yeah, they try their best to somehow reduce scope 1 emission. Yeah. Scope 1 emission is basically emission which is under control by the company itself on the operation side in the field. Yeah. Whether it's from the process of production itself or the way they handle all the emission produced along with the production, yeah, including power generation in the oil and gas fields. Yeah, some companies actually decided to shift to renewables for power generation in the operation of the oil and gas fields. Yeah, installing solar panels in Tangguh, for example. Things like that, to the extent that, on the operation side, it's also green. Yeah, and then carbon trading. Yeah. Of course, some companies have the flexibility to do something about carbon trading. If they are on deficit side, they have to buy, they have to buy offsets from the carbon trading market. If they have a surplus, they could actually sell their carbon trading for somebody else to buy, because that other party has a deficit, hence they need an offset. This is somehow something which adds to the complexity of upstream oil and gas production. But again, these are all new facts of life, and we have to live with this if we want to survive. Okay? We could see that most majors and some of the independent companies, they are also ramping up their investments in renewables. Yeah? In particular, solar, wind, wave, biofuels. Despite the controversy on biofuels, especially with what's happening in Indonesia, for example, biofuel with the government policy of biofuel, B30 and so on and so forth, with the target of increasing, the share of biofuel when it comes to fuel products in Indonesia, is actually competing with the other side, with the agricultural side, with the cooking oil side of supply and demand in the country. Yeah, but some companies are doing something about biofuel as well, because it's deemed to be renewable, even though it's more controversial relative to other renewable energies. Some are investing in EV charging stations, especially in European countries and in the US. So all these major oil and gas players are changing. They are all transitioning, and they are changing very rapidly. Hence, the Indonesian government will have to notice that as well, and somehow adapt, adapt and adjust to these new characteristics, because this is something that we never had before. Hence, it's unique. Yeah? I will have to talk about nuclear, because nuclear is advancing very rapidly, especially on the technology side. Yeah, because it is difficult to somehow transition from fossil fuel to cleaner energy, and nuclear, even though it's not deemed to be part of the renewable family, but it is part of the clean energy family. Yeah, and especially with the generation 4, and maybe soon there will be a generation 5 of nuclear power plants based on nuclear fusion using hydrogen, if you will, and then it would lead to very clean, very safe, and virtually, basically unlimited source of energy with almost zero waste, because they have this perpetual circular energy cycle, if you will. Yeah, and very low and very short-lived radiation as well. So it is very safe. As a matter of fact, this new generation of nuclear is probably safer than most renewable energies. Okay, so in the end, we will have to transition into nuclear as well. If you look at the Indonesian government roadmap in achieving net zero by 2060, you could see that the government has the plan to start, somehow considering and eventually moving to partially, to nuclear energy by 2045. Yeah, and hopefully by then the nuclear power technology would be such to the extent that it would no longer create any controversies, especially when it comes to safety. Yeah, but without introducing nuclear power, it would be very difficult to achieve net zero by 2060 for this country and for most of other countries as well. Yeah. So, in the end, in reality, oil and gas, especially upstream oil and gas, are competing with renewables. Why? Because the investors, when they make decisions, they will have to consider all these new developments, all these new facts. Yeah, and the consequences are actually not indirect, but rather straightforward, direct. Why? Because every time they invest in oil and gas, they know they will deviate. Yeah, they will depart from their target of achieving net zero. They know that if they spend more money on oil and gas, then they will have to invest more in the carbon offsets, yeah, or in the carbon emission reduction, including CCUS, but not limited to just CCUS, and they will have to do something as well in renewables. Yeah, so this fact alone should actually be sending a very strong message, yeah, that now we have a totally different ball game. The rules of the game have significantly changed to the extent that all these governments, including Indonesia, will have to look at this when they issue new regulations, new policies, and introducing new upstream petroleum contract system. Okay. Any questions so far, by the way, before I move on? Okay, good. This is a very old slide. I took this from Wood Mackenzie in early 2021. So basically, all these big majors, they are adopting different strategies in handling the energy transition. Yeah. As of early 2021, ExxonMobil and Chevron, they seem to be sticking with the big oil business model, yeah, in which they would basically still consider oil and gas, E&P, or upstream oil and gas, as the core business, and they do not have ambitious, if you will, energy transition plan. But as of the end of 2021, maybe as recently as January 2022, ExxonMobil made an announcement, Chevron also made an announcement that they would also commit to achieving net zero by 2050. And the only way for them to do that is to do something about the transition. There's no way they could achieve net zero without partially, at least, shifting to renewables. There's no way they could actually somehow offsetting all their emission to be net zero, even if they invest in CCUS and carbon reduction technology all over the world in all their oil and gas fields, they would not be able to achieve net zero. Yeah, they would still have to buy offsets, And carbon trading pricing is increasing very rapidly. So it would not be cheap to do that. So they will also transition in order to achieve net zero. Okay, company like Total, they decided to do both as rapidly as ambitiously. Yeah, they would like to grow E&P because they know that the need for oil and gas is still there. Yeah, the demand for oil and gas will still be around. Even by 2050, the demand will still be very high. So they say that we would like to still grow oil and gas. At the same time, we will invest rigorously in renewables. By doing that, they believe they could achieve net zero because everybody, including all these majors, they have their own roadmaps. They have their own strategy, and they are being constantly monitored because this is a commitment that they will have to deliver. Otherwise, they would be severely punished, as I said earlier. So, because they are being monitored and the implication would be so severe, they have to develop a transition plan which would work. Yeah, it would have to look reasonable. It would have to look, rational. Otherwise, everybody would know you are just greenwashing. Yeah? You know the term greenwashing. Yeah, you are polluting the world, and you just do renewables because you would like just to wash your image as if you are a green company. Everybody knows that greenwashing would not work anymore because of this constant and scrutiny and monitoring process being done by everybody, including their host countries, their own governments, the stock market, the NGOs, and everybody. Yeah. Repsol, Eni, Shell, Equinor, according to Wood Mackenzie, based on their study, they would like to harvest upstream oil and gas because they know they already have all this portfolio of oil and gas fields, and they would like to harvest, from these fields. Eventually, they will decline anyway because naturally, oil and gas fields will decline, and at the same time, they would shift to renewables by investing in renewable energies. BP, on the other hand, is the most aggressive, at least compared to the other majors. Yeah? Because BP said, I would like to deprioritize my upstream oil and gas. I would like to reduce oil and gas production by 1 million barrels oil equivalent, net BP, by 2030. At the same time, I would invest a lot in renewables. Okay, that's very, very aggressive because BP, well, I call BP they now because I no longer work for BP, they cut oil and gas production. And in doing that, what are they exactly doing? They are basically high grading their oil and gas portfolio. Okay, yeah? Those with low economics, with high emission, they would try their best to divest, and then they would only prioritize on the best of the best. And the best of the best is a combination of the upstream economic itself, the rate of return, the NPV, if you will, of all the oil and gas projects, and at the same time, clean, yeah, low emission. Yeah. So they only pick the best of the best. And all these behaviors demonstrated very openly because they make market announcements all the time, should send a strong message to all governments, including the Indonesian government. If they behave like this, yeah, remember, Exxon and Chevron are in reality moving to either Group 2 or Group 3. Then E&P investment would have to be tremendously better in order for them to be interested and willing to invest, including in Indonesia. Otherwise, they would be considered as committing a suicide. Yeah. Any questions? Ferry, are there any questions on the chat?
Not yet so far, Budi, but I already offer any questions directly to you or put in the chat box as well.
Okay. Let's look how the general public and the international media look at oil and gas and renewables. Okay. The governor of Texas had to actually introduce a new law, new state law. Okay. Basically saying that if you boycott oil and gas, then Texas will boycott you. Why did he have to do that? This was mid last year, yeah, 2021. Because some companies are boycotting oil and gas. Yeah, some companies refuse to do business with oil and gas. They refuse to be supplying goods and services to oil and gas companies. And Texas, being a very Republican state, arguably the biggest oil and gas producer in producing state in the US, of course they retaliate back by saying that if you are not willing to do business with oil and gas, then you should not do business at all in Texas. That's sad, right? Because some of these third-party companies, suppliers, vendors, contractors, if you will, they are also being pressurized. Yeah, don't do business with oil and gas; they are polluting the world. That has severe implication on upstream oil and gas investment, because now suddenly your costs, yeah, procurement costs of goods and services becomes more expensive, because some of them refuse to be your EPC contractor. Some of them refuse to supply goods and services. Some people refuse to work for oil and gas companies. Very sad, but that's kind of challenges that oil and gas companies are facing today. Yeah? Some are dumping oil stocks. Some governments, regulators, they retaliate back. If you keep dumping oil stocks, if you refuse to buy oil bonds, corporate bonds issued by all these oil companies, then you should not do business in this state or in this country. But this is happening all the time. So all these oil companies are facing significant challenges. They need something significantly better for them to consider that it's worth it for them to invest more in oil and gas. Okay. Same thing, Norway's 1.4 trillion wealth fund. Initially, they decided to basically dump oil stocks, yeah, from all these oil companies. But the government of Norway said, no, don't do that. But now they issued basically a notice of warning that they will start, loading off, selling off their holdings of oil and gas stocks. ExxonMobil, they decided to, a bit late compared to the other majors, but they decided to transition to oil and to net zero as well at oil. This is happening. This should remind you to the exact same situation with tobacco companies in probably the late 80s, the early 90s. Yeah, no more advertising for oil and gas companies because they're boycotting, the oil and gas companies. These are all just illustration of the pressure to adopt energy transition, the pressure to achieve net zero. Otherwise, you will run out of business because of the market punishment. Okay? On the financing side, the Texas government threatens to pull their funds, and it's in the, believe it or not, the government of Texas, from the state level all the way to down to the county level, they have about $500 billion of funds. And they threaten to withdraw all these funds from the banks which refuse to do business with oil and gas companies. Okay. Some of these banks, they refuse to finance oil and gas projects, coal projects. Some of them, they, of course, refuse to buy bonds. They are basically boycotting oil and gas, fossil fuel. And the government of Texas, if you keep doing them, I will withdraw my $500 billion from your banks. Okay. What does that mean? That means financing for oil and gas projects will become more expensive. When the cost of investment, when the cost of capital is higher, then the only way for them to be able to keep investing in oil and gas, including in Indonesia, is by getting a significantly higher economics. Because of the cost of capital is higher. Some to big tobacco. Okay. So there is a war going on between the fossil fuel side, oil and gas in particular, and the renewable side and the clean side, and they keep punishing each other, yeah, by threatening each other, doing this and doing that, as you could see from all this news coverage. The government of America, the US, especially the current government, the administration of Joe Biden, yeah, they are very rigorous when it comes to making sure that we are shifting into energy transition and achieving net zero. To the extent that there is the so-called net zero banking alliance, yeah, which in reality would, according to this article, would somehow limit the ability of oil and gas companies to keep investing and hence be able to increase production. So the Citigroup, Citibank, and again, Wells Fargo, Bank of America, Morgan Stanley, Goldman Sachs, JP Morgan, they signed this net zero banking alliance. Okay, so as I said, that would have a severe implication on the economics of new investments in fossil fuel, including in particular oil and gas. Because even no matter how big the oil company is, yeah, even if it's a major oil company, there's no way they could invest using solely equity funding. No way. They will have to raise funding at the corporate level, if not at the project level. Some actually have to raise funding at the project level, much like the, for example, the TBS, trustee borrowing scheme used in LNG projects in Indonesia. That's financing at project level. But at the very least, they will have to raise financing at the corporate level by borrowing money from banks, by issuing corporate bonds and the likes. Yeah. So if the cost of financing is getting more and more difficult because of all these pressures, then of course they would prefer to do something which they know for sure is better. And we will talk about that in great details. What is that? Renewables. Because renewables is actually the exact opposite. The cost of financing in renewables is very, very low. All these banks, which are basically boycotting oil and gas, they are actually giving incentives to renewable projects with very, very low cost of financing, significantly improving the economics of renewable projects. So if you are a major oil company and you know you have to achieve net zero, otherwise you have to bear the consequences, which may actually mean that your company go bankrupt, or transition into renewable, which with a significant bonus. And we'll talk about that in great detail in the next slide. So basically the message is boycott big oil, boycott oil and gas. This is happening. And it doesn't take a lot of effort for you to realize that this is happening. Just open, news media, Google it, you will see. Okay, if there are no more questions, I'll talk.
There is a question, probably.
Sure. Okay.
Yeah, one question is from Pak Kin, actually. So he's referring to one of your slides, actually. So what do you advise for the government of Indonesia, specifically for Pertamina as well, to achieve the net zero, and at the same time fulfilling the national hydrocarbon fuel as the requirement? So Pak Kin refers to one of your slides.
Okay,
so
thank you so much, Pak Kin Chandrasa. Pak Chandrasa, I have to admit, is actually my guru, yeah. But a long time ago, when I started my journey in upstream oil and gas, I actually joined.
You're on mute, Pak Budi.
Yeah, Pak Kin is was my guru, actually. I said, because I started my journey a long time ago, more than 30 years ago, with Asamera, and then I moved to ARCO, and I joined Pak Kin's team. So thank you so much for the question, Pak Kin, but I will actually talk about that exact question in the next slide. Yeah. So if you can somehow bear with me, and we will discuss more probably towards the end of the session, if we still have time for Q&A, to talk about what should we do. Not just the government of Indonesia, but all of us, because we are the industry players, and IPA is the industry association. Hence, we have to work together. Yeah, we have to work hand in hand together to address the situation, because it's a very serious situation for Indonesia in particular, because you see that big gap between supply and demand of energy, and it's threatening the economy of the country. Yeah. So if you can bear with me, I will address exactly that question, because the question raised by Pak Kin is the essence of this session. Yeah, and we'll definitely talk more about that. Okay. So if you allow me to go to the next slide, basically it's comparing the two. Why do we have to do this? Because the oil companies, they are doing this. They are comparing the two. Because they know that investing in oil and gas, you will have to face all these hassles that you see, that you saw on the previous two slides. Yeah? Investing in the renewables, then you know, this is the time and age, if you will, of transitioning into renewables. You would be deemed as the good guy if you invest in renewables. You would be seen as the bad guy if you invest in oil and gas. So you have to compare the two, because by comparing the two, you would see the perspective of these oil companies. Okay. First, definitely whether it's green, clean, or not. Okay. So oil and gas, you have emissions throughout the whole cycle, all the way from wellhead production, upstream processing, transporting the crude or the gas or the LNG, okay? Whether it's pipeline or LNG vessels, downstream refining process in the oil refineries, and even at the end consumption site, yeah, combustion engine cars and other use of transportations or power generation. You have emissions throughout the whole stages. Renewables, on the other hand, they are perceived as being clean from end to end. Yeah, virtually zero emission, even though you will have to handle some of the waste. Yeah? And we'll talk about that in a bit. Oil and gas have limited resources and fluctuating commodity market prices. You invest in oil and gas, Okay, you use a $65 price assumption. And you look at the economics, oh, it looks good. Rate of return is higher than 15%. Let's proceed, yeah, with FID. Let's start investing. Guess what? Oil price could drop to $30, even lower. Yeah, especially, you know, during the first months of the pandemic, you could see that oil price could, you know, somehow plummet significantly. Meanwhile, for renewable, the primary energy itself is unlimited and it's basically free. Primary energy being the inputs, yeah, whether it's solar or wind, yeah, or wave or water, they're all free. There's no way that the price would increase nor decrease. Hence, you have certainty when it comes to the security of supply of the primary energy itself. Okay? So that's the second fact. Yeah. And the third one is the big one. On oil and gas, you have to go through a very long stage of exploration. And then if you happen to be lucky to have a discovery, then the development stage would take a long time as well. This is not just the construction period, but prior to construction. Yeah, you could sign the PSC in 1998, like the Masela PSC with the Abadi field. And you have to go through an exploration period of more than 10 years. If you take into account the appraisal stage, yeah, then it's 15 years. If you look at the pre-POD, pre-development stage, then more than 30 years. INPEX already announced that they would not be able to start commencing production by 2028. It will be sometime post 2030. And they could not even commit when post 2030 they would be able to bring the Masela on stream. Yeah. Meanwhile, on renewable, exploration is nothing more than scouting for locations. Yeah? You look at the best locations with high intensity of wind, high intensity of solar ray, yeah? And that's it. And it's quick because you know where are the best locations for those type of renewable energies. And it's cheap. Yeah, in upstream, it's very expensive. Very expensive. Exploration could cost billions. And the following appraisal works, the preparation for development and the development cost itself, it costs a lot of money. Yeah, and remember, the risk profile is totally different. In oil and gas, exploration risk is very, very high. Yeah, you could spend billions on exploration and basically discover nothing. You lose the whole investment, just like that. Yeah, development costs, likewise, very expensive. You have operational risks. You can have an oil spill. You can have a well blowout. You drill an oil well in the Gulf of Mexico. Something happened, and you have this spill, and it would cost you tens of billions of dollars. Like BP basically spent 70 billion because of what happened in the Gulf. Okay, subsurface risk. You could, it just happens that subsurface risk in oil and gas is very high. You think, based on available technology, certification, that you have 2 TCF. You think you would be able to produce for 15 years from this Kapodang field. Suddenly the reserve is gone. You lost the pressure, that's it. You lost production. Yeah, on renewable, There is no such thing as exploration risk. No such thing. There is no subsurface risk because, well, you have weather, which may have an impact on the intensity level of solar ray or the sunshine itself, basically, or wind or wave. Yeah, but that's part of the nature of renewables. And there is a way to somehow mitigate that, right? With batteries and everything. Yeah, with backup power, which could also be renewable power. Doesn't have to be, fossil fuel. Environmental risk very limited, probably with the waste. Yeah, and all governments, they are doing something about how to best handle waste produced from renewable projects. All the solar panels, they have limited, age. Yeah, they have technical limitation when it comes to how long you could use the solar panels. And once you have to replace them, then you have to do something about the waste. Yeah. Likewise with wind, blades and everything, and turbines and everything. Okay. This is one of the most important thing. In oil and gas, you require a high rate of return on investment. Why? Because you have to cover for the various risks. That leads to very complex economics with a lot of uncertainty. Yeah. As I said previously, you have a risk with price, you have a risk with operational risk, with exploration risk. When you invest in a new oil and gas project, in reality, you have to be able to compensate for all the costs that you lost during the exploration stage. Not in that field, but throughout the whole company. Because you drill 5 wells, 1 is successful, the other 4 are dry holes. And they are in other parts of the country or maybe other parts of the world. But in order for the company to be able to survive the business, then this one successful discovery will have to be able to cover for the losses suffered in the other 4 dry holes. Otherwise, the company will not survive as business. Yeah. So, for example, the government of Indonesia should be aware of that. Yeah. A rate of return in one single project, oh, it's 15%, good enough for you. You have to understand that this company actually suffered losses in other areas, maybe even in other PACs in Indonesia as well. In order for them to be able to survive as a business, it has to be positive economics for the whole 5, not just for the one single discovery. Okay. So financial funding is getting more difficult and costly, and we talk about that because of the Net Zero Banking Alliance and the likes. Renewable, on the other hand, they tend to have slightly lower, and we will look about this particular fact, whether indeed renewable has worse or lower economics compared to upstream oil and gas. Because that's what you think is the case. Believe it or not, that's no longer the case. And we'll talk about that. Renewable, they tend to have slightly lower, and that's arguable because some of them actually have better and higher economics compared to oil and gas. But they tend to be very stable, steady, and high certainty. Why? Because you know that the wind, the sunshine, the solar ray will always be there. Okay? There is no risk that you would be hit on the procurement of, primary energies in the form of sunshine or wind. Stable because you know how much it would cost. You don't have to spend a lot of money, maybe just nickels and dimes for exploration. You know when you have to invest, you know how much it will cost. Yeah, you would like to develop a 500 megawatt solar farm. You know exactly how much that would cost. You know exactly how much the price of the power generated from that project by signing a long-term power purchase agreement, yeah, whether with escalation or without escalation, you know it would be stable. The cost will be stable. The primary energy supply would be zero cost because they are renewable. The financing will be stable. Everything will be stable. All it takes for you, once you are done with developing a renewable project, is maintenance. And with better technology, maintenance is relatively low, even compared to operating costs of an oil and gas project. Financial funding is fully backed up by commercial banks and various institutions. As a matter of fact, some of them are offering huge funds for you to borrow and invest in renewable projects. Because these banks, believe it or not, they also have to, quote unquote, be on board on the bandwagon of this energy transition. Otherwise, they will also be punished. Yeah, that's why they are boycotting or getting more stringent when it comes to lending money for oil and gas, but they are doing the exact opposite when it comes to renewable. Oil and gas, when it comes to the technology, is very mature. You have to admit that. Drilling technology, production technology, even refining technology, they are all pretty much mature and limited. You have some new technologies here and there for seismic and the likes, but very limited. On renewable, it's the exact opposite. Every single day, you always notice that, oh, they have a new discovery, invention on solar panel. Now it's paper thin. You could basically wrap this panel, if you will, and you can install it on windows. It doesn't have to be on rooftop anymore. It could be on any surface. And the same thing is also true with wind power technology and the other renewables. Why this is important? Because advancement of technology actually brings continuous improvements, and continuous improvements brings better efficiency, and better efficiency brings better economics. Yeah, on the oil and gas side, you don't have that. Next, oil and gas, you have to admit, the demand is still there, but it's slowing down. At some point, and lots of different parties argue whether it's by 2030, or some even said the oil demand has reached a peak already. Now as we speak. Some said it would not be until 2030, and then it will start declining after that. Likewise with gas. Gas would probably still be growing maybe until 2040 or towards the end of the 2030s, because gas in reality is probably a bridge, yeah, and it is a good bridge, transitioning from fossil fuel, coal and oil into renewable. But the demand, nobody can argue, will somehow and sometime slow down and start declining. Yeah, because the energy transition is for the whole cycle, end to end, right? Transportation, especially land transportation, eventually will all shift to electric cars. Hence, electric cars will dominate the market, and combustion engine cars will be forbidden. At the very least, they will stop producing. Some European countries already declared, and some car manufacturing companies already made announcements that they will stop, producing ICE, internal combustion engine cars, by a certain time. Yeah, so it will definitely start declining, at least when it comes to power generation. On the use of oil and gas for petrochemicals and other types of manufacturing, probably will still be there. On aviation, because it is difficult to basically change 100% to renewables for aviation fuel. it will still be there, but it will be nowhere near the peak oil demand like what we have today, 90 million barrels per day, whatever is the current demand for oil is, it will be significantly lower than that. Meanwhile, on the renewable side, of course, it is rapidly expanding, yeah, and it's actually doing both, yeah. First, renewable is being adopted for new energy markets with new energy demands. At the same time, it's also carving out, the portion or the market share of fossil fuel energy. Some of the fossil fuel power plants, for example, coal power plants, if they have to be salvaged because they are no longer operational, then they will shift to renewable. Hence, it's more than just transitioning for new demand, but it's actually also phasing out the fossil fuel side as well. Okay. However, oil and gas, they are easier to transport and store because we have all the infrastructures, yeah? Storage tanks and everything. You have all the refineries. Hence, if you already have the infrastructures, then it's more practical. Yeah. And the good thing about oil and gas is that you can produce 24/7. It's relatively stable. Yeah. Of course, you have natural reservoir decline. That's part of the characteristics of oil and gas. But on renewable, you have a more limited area. Yeah, you could not easily transport the power other than through the electricity transmission lines or battery. Yeah, but battery technology is also rapidly developing and progressing. But you would need to store some of the power into the batteries in order for you to be able to transport the energy, or in order for you to be able to back up power during the the off time. For example, nighttime in a solar power project. Hence, you have intermittent production, highly dependent on weather. If you have cloudy sky, you have rainy seasons, whether it's day or night, whether it's summer or winter, unstable and fluctuating density. And definitely solar farms, likewise with onshore wind, require extensive use of land. Yeah, some both wind as well as solar. Some of them are on water. Yeah, floating solar panel, like what PLN and Masdar are currently doing at the Cirata Reservoir Dam. That's floating solar panels. So it requires a lot of extensive use of land. Oil and gas, you have waste, yeah, everywhere, yeah, throughout the whole value chain. You have to decommission pipelines, wells, platform, processing facilities, all the way to the downstream side. But renewable, they have limited waste when it comes to the energy itself. But they do have waste when it comes to the equipments, whether it's the solar panels, the wind blades, the wind turbines, and you have to handle those waste. So what's the point of you being able to produce green energy, but the waste handling is not green at all? So governments, regulators, companies, they are trying to do something on the technology side to make sure that the recycling process of all this renewable waste will also be equally green. Yeah, hopefully, eventually everybody will get there so that we have a better world. And last but not least, as you have seen, of course, oil and gas are under constant attacks, yeah, from various parties, perceived as the big bad guys. Big oil is the big bad guys. Meanwhile, on renewables, you are seen as the good guys. Yeah, you get lots of incentives from governments, from banks, yeah, from lenders, from everybody, basically. You are so easy to get the best talents when you recruit people working for your company if you are deemed as a green company, because the what do you call what do you call the new generation, Pak Ferry, the millennials, yeah, the millennials, they have this different mindset. Yeah? I'm young. I don't want to work for a company which is polluting the world. I would like to work for a green company. So taking into account all these factors, then you should be able to imagine what is the perception in the minds of all the oil and gas executives, yeah, throughout the whole transition process. Oh, shall I participate in this new PSC bid round in Indonesia? Probably a good, oil or gas prospect. Or shall I invest more in renewable? You should have a pretty much good idea about their decision-making and thinking process. Okay? Any questions?
Yes, Pak Budi, I actually read from the chat box. By the way, I just want to remind you it's now 23 past 10 o'clock, so it's scheduled to 30 minutes past 10, but
Thank
we can
you.
extend that. Yeah.
So my deepest apology, Pak Ferry and everybody in the call. I'm sorry, I got carried away, and looks like we are running out of time. I still have a lot to cover.
Sure, but if you can ask a question, I believe this is a burning question. I can just summarize 2 questions into 1 question. There are actually 3 questions. So actually transforming from having or being the oil and gas as a conventional to renewable takes some time. And then what is strategy? Would you kind of give suggestion, also try to impose that as a part of that strategy as well? Would that investor, for instance, participating in CCUS, for example, and then also asking the question for Pakin as well. There will be a gap in terms of energy from now to 2020 to 2030, and then mixing all the energy to fulfill that kind of a demand between mixing geothermal, solar, hydro, and etc. What kind of a business model that you would suggest in this discussion? And then would it be through the government, is just only to avoid any leaving out the, the prospect, and also would it be any kind of a strategy as well as suggestion that you may have? Probably that's 1 or 2 questions I try to summarize.
Yeah, thank you, Pak Ferry. Again, that question is basically the essence of the whole session. So I would like to address that question, because as a matter of fact, it's part of the conclusion of the session, which I will present at the very last slide. So if you can wait for a bit, and I have to apologize here that this most likely will go beyond 10:30. If you don't mind staying around for until 11, that would be great, because there's no way I could finish the session within the next 5 minutes, and we are getting near to the core, of the session itself. I'm very sorry. You have to blame me for being for spending too much time, but this is a very important subject, and we have to be aware of all this because we would like to do the best, for upstream oil and gas, for Indonesia, of course, and we have to work together. What is the solution? In the end, the solution is a multidimensional solution. It has to be a breakthrough, both on the upstream oil and gas side as well as on the renewable side, because you have to make sure that the two are hand in hand in order for Indonesia to avoid a catastrophic, energy crisis or economic crisis created by the energy crisis itself. Yeah. So if you can bear with me, my apology. If you think we should do this in 2 separate sessions, that could potentially be an option as well. So I just would like to go very quickly on the fact that the economics for renewable actually is not bad. Okay, this is a study done, 3-4 years ago, not long time, but I bet now it's even better. But this is basically comparing the rate of return of wind and solar projects in certain European countries, and you have all this list of countries, using new technology. The one on top here is new technology, and using existing technology, 2015 technology. You could see that technological advancement and I bet by now it's even better than the one on top, actually is game-changing. The rate of return of solar and wind projects in certain countries, especially for solar and onshore wind, are actually about 10%, closer to 10% on average. In Italy, of course, you should expect that solar power is doing better. Yeah, in the Netherlands, you could see that wind power is actually generating about 12.5% rate of return. The Netherlands, they are well known for their windmills. Yeah, and it's very prolific when it comes to picking a location for a onshore solar wind. You should go to the Netherlands. Next is wind and solar using different lifetime variation, because lifetime is key when it comes to economics. Economics is not just about cost, price, and volume. Economics has to do a lot with time. Yeah, how much time you have to spend for exploration, how much time you have to spend on pre-development. For upstream oil and gas, it takes a long time. And then once you start producing, typically, a normal average oil and gas fields would produce for 10, 15 years, maybe 20 years. Okay, renewable projects varies as well, 15 years all the way to 30 years. The longer the lifetime of the project, yeah, the longer, for example, the lifetime of the solar panel, the wind blades, the wind turbines, then the better the economics. And as you can see here, yeah, the rate of return are, some of them are even higher than 12%. Okay, for solar, for wind in Italy. In the Netherlands, if you look at for solar in Italy, and then if you look at the bottom table, that's for wind. In the Netherlands, it's almost 14% rate of return. And guess what? It's guaranteed stable rate of return. Because you don't have to deal with this operational risk, exploration risk. There will be no spill. There's no way that you will have an oil price plummeting lower than $30. It's stable, guaranteed economics. Okay. Now, look at oil and gas. I have an old study here, but it's good enough to give you an illustration. Oil and gas rate of return on average global is 10.4%. Think about it. Some people, and then Indonesia is even lower. Yeah, you could see that it's probably around 7%. And people say, it's not true, Pak Budi. We always approve POD with 15% plus rate of return. This is not true. Well, this is rate of return basically for the industry and for the global average, meaning what? It takes into account everything and its full cycle. It's not rate of return POD point forward. It's rate of return since the day you start investing. You start signing a PSC, you pay signature bonus, you spend money for seismic, for exploration wells. You calculate the NPV and the rate of return full cycle since the very first day. And if the span of time since the first time you spend money until the first time you start generating revenue by producing from the field is, in the case of Tangguh, PSC 87, start producing 2009. 22 years. So if you calculate the rate of return and the NPV from inception in 1987, I bet you it's very low. Marcella, if you calculate the NPV, the rate of return since 1998, and assuming it will start generating revenue in 2030, I bet you it's very low. Even worse, this global average Indonesian rate of return as well, being 7%, takes into account all the lost investment in exploration. How much money all these oil companies spend exploring in Indonesia, drilling exploration wells, dry hole, dry hole, dry hole. You have discovery here and there. Okay, Banyu Urip, Masela, even though it's still stranded, and then Saka Kemang, yes. But if you take into account all the investments by the whole industry in the country and then calculate the rate of return for the industry, it is 7%. It is very low because that's the nature of oil and gas, right? In order for you to have a discovery, you have to drill a bunch of dry holes. So you have to calculate this. I know POD, PAC is limited and ring fence at the POD level, but the company, the investor, the ring fence for them is the company. So they calculate, or in the case of the industry, the ring fence is the industry. So if it's 7% or even global 10%, what would you do when you see that renewable promise you, yeah, a stable, steady, with very low risk economics? What would you do? Okay, renewable is very, very good at the moment. Some proponents of renewable energy, equity funds for renewables, they are offering a lot of renewable projects. So if I can share, bear with me. How do I share my screen? Yeah, very well. Basically, I have a link to a website which offers renewable projects. Solar panel for a petrochemical plant in India with a rate of return of 30%. Okay, and then a lot of other renewable projects, wind, solar, mostly wind and onshore wind and solar panels. They're all above 10%. And remember, it's different compared to oil and gas because 10% for oil and gas still is still exposed to all this risk, yeah, but not for renewable. And the recent development that for solar power generation in Saudi Arabia, the cost of basically power generation for solar is actually getting very close to 1 cent per kilowatt hour. I know it's Saudi Arabia, so you don't have to invest in land because land is free. You get tax holidays, you do not get import duties and everything. Yeah, so it's very low cost for the investor. But 1 cent is very, very low. We know that the solar intensity level in Saudi Arabia is probably the highest in the world because it's the hottest place in the world. But still, 1 cent, because you know, coal in particular, they are probably roughly around 4 cents to 5 cents. Maybe some of the best one, the bigger size one, 3.5 cents per kilowatt. Okay, gas power generation like Java one, it's close to 6 cents per kilowatt. Don't talk about high-speed diesel; it's way up there. But renewable is getting to a level in which the energy price itself, the power price in this case, which is the very end side of energy, is getting so low and so efficient. Plus, it has all these bonuses of being perceived as the good guy, not polluting the world and everything. Okay. Okay, so in reality, this is a personal opinion, but that's why it's a disclaimer. This is not the opinion of the IPA or anybody. This is my personal opinion. In order for you to be able to cope with and address the facts that I just laid out, blatantly to all of you, then it takes a major breakthrough to be able to save Indonesian upstream oil and gas industry. There is no way you could just improve the PAC terms and conditions here and there, small bits and pieces, no way. Because you should be aware of all the things that I just explained, that for the investor side, it's actually a big risk for them to invest in upstream oil and gas. It's a big risk, and it's not even worth the risk because of the fact that they will be severely punished by, the market, by governments, by NGOs for increasing oil and gas production. So BP, as I explained, is the only one so far which somehow took the boldest move by adopting the most aggressive transition strategy, which is to reduce oil and gas production and invest in renewable. Okay, but some of the others will eventually get there. They are just waiting for them to be able to harvest their upstream portfolio, and eventually they will all, prefer renewable as well. They will be more selective in investing in oil and gas. When they become more selective because they want to make sure that this is the one which is the best for me and it's worth all the hassles of investing in oil and gas, they would pick the best of the best. And Indonesia, if you want to be the one on the shopping list for upstream oil and gas, will have to be on the top of the top. And it takes something very bold to do that. PSC, traditional with cost recovery, or growth split, both of them are no longer competitive in this new environment. Yeah. Why? Because Indonesia is a net importer of energy. We are a net importer of oil, 1 billion barrels a day today, and it's growing. Soon enough, we will have to start importing gas. Soon enough, we will have to stop exporting coal. Yeah. So in reality, the government regulation policy should pay attention on that fact alone, because it will have a significant impact on the national trade balance, balance of payment, and the economy. If you keep importing energy, then you will have to do something on the domestic side, and anything other than import is better. When I say anything, it's including upstream fiscal regime. If you import oil or gas, government split will be zero. Government tax revenue will be zero. If you improve the fiscal regime, the petroleum contract system, not a PSC, it could be something else, even if it constitutes, a revision of the oil and gas law, so be it, because that's what I mean, a major breakthrough. Then if you improve the investment climate by changing or adopting the fiscal regime, the petroleum contract system itself, and you would be able to attract investors, guess what? Even for them to start spending money on exploration, it will still be better than import. Because if they spend money for exploration, then the government would still receive something, right? Because the company, the employees will pay income, individual income taxes. Their contractors and suppliers will pay corporate income taxes, and the employees of the supplier company will also have to pay income taxes. So the impact on the multiplier effect for the domestic economy will still be better than import. If they have a discovery, because you could not expect a discovery unless you have exploration. If you have discovery, it's even better, right? Because even if the government share is just from taxes, like in any other industries, manufacturing, they only pay taxes, right? Even the government only receive taxes. How much is the tax rate? It's 40%. Because you have corporate income tax of 25%, and I know the government is talking about lowering it down to 22%. That's good. And then you still have to pay branch profit tax of 20% on the remainder. 20% of 71% is 15%. 15% plus 25%, that's 40%. But 40% with zero government profit split would still be significantly better than import, because import, you have zero government. If you impose import duty of 2%, it's basically minuscule. But if you change the petroleum contract system, for example, how could you bid tax and royalty in other countries? In Australia, the government take consisting of both tax and royalty is about 40%. How could you beat them? They have better investment climate, they have better regulations, they have better bureaucracy, and more importantly, they have way better hydrocarbon quality of prospects. How could you beat them? Because even if you change the fiscal regime into tax only, hopefully that is better than tax and royalty, because there's no royalty, tax only, just like a manufacturing company, you would only be able to equal them. Because the tax rate in Indonesia is 40%. So essentially the government take is 40%. You still would not be able to beat them because their exploration prospect quality is way better than ours. Yeah, but once the focus shift to making sure that you have discovery and production as much as possible, which will still be way close to what the country demand is, then you would reduce import. Because domestic, even though the government share would only be from taxes, but remember, it's not just taxes from the upstream side, it's taxes from the individual income for the employees working for the upstream company, individual corporate income taxes from the companies working as suppliers, vendors, contractors, EPC contractors, drilling companies of the upstream oil companies. They pay corporate income taxes, their employees pay income taxes. You have, revenue sharing with the local government. Hence, the overall macroeconomic impact is still way better than import, because import is hurting the economy. It's depleting the national foreign exchange reserves, widening the trade deficit balance, weakening the exchange rate. Meanwhile, the more important thing is the fact that the oil and gas reserves are there. You know that Indonesia still has very good prospects, but the prospect will be worthless if you do not explore and develop and produce them. So the way I describe it is that what is priceless today, like oil and gas, is still priceless today, tak ternilai, may become worthless, tak bernilai, in the future. Because if you just let all these hydrocarbon prospects underground for another 50 years, guess what? By the time you explore and develop those reservoirs, then oil and gas would be deemed, just like tobacco, as something which is forbidden. It will be tightly controlled because it would produce emission. Remember, net zero is not the end game. Net zero is just making sure that emission produced is equals to the emission being offset or reduced. In the end, this planet would have to have positive emission reduction. So meaning what? Meaning the emission being contained, being processed, re-injected into the subsurface will be bigger than what is produced. Net zero is just the beginning. So if you have hundreds of billions of dollars of value currently not being discovered, not being explored, let alone produced today, then guess what? It will never provide any economic benefit to the people, to the country of Indonesia. Because now, in order for you to basically beg the oil companies to enter into Indonesia, invest in exploration, it has to be so good because of the things that I just explained previously, right? So do it now, because I think if it's now, it's never. Because oil and gas, guess what, has a longer cycle than renewable. The exploration stage, the development stage, everything takes longer, yeah? And it has to be significantly better. As I said here, much better than the economics of renewables to offset the drawbacks. Okay, so that marks the end of my session. Do we have time for Q&A? I think we should address some of the questions. Yeah, I hope some of you got the response that Akin, for example, as I said, it's a multi-dimensional solution. It could not be simply one-sided only. Fixing the fiscal regime itself is not, or even changing the upstream petroleum contract system itself is not enough. You have to do something better as well on the renewable side. You have to do something totally different on the taxation side, introducing incentives, reducing bureaucracy, but everybody will have to work together hand in hand. Otherwise, then you are headed into this catastrophic energy crisis. Yeah, it's concerning because Japan, Korea, they are importing energy all the time, but they have the economic ability to do that because their export value is significantly higher, hence they can afford to pay for the energy imports. We are nowhere near that. We are improving, as I said, the government is enhancing value by prolonging and extending the value chain on the downstream side of all these mining products and as well as on manufacturing. But it's not enough. Yeah, and we should not risk the future of our children and grandchildren simply because we are not taking the right decision today. Thank you. Back to you, Pak Ferry.
Many thanks, Pak Budi. I believe we still have time. If people still want to stay here in the room, we have to actually question probably the same or similar questions. One is all about how can you balance between the oil and gas, conventional oil and gas, as well as renewables from Pak Dodi. Actually, Pak Dodi left. And the other one is around the questions on, been asking this a lot around the challenges to meet the 12 BCF and 1 million barrels. And then how can you strategize that in terms of balancing, again, the conventional and renewables? So I believe those are the questions, and or you probably can pick up one of those questions in Pak Budi. Thank you.
Yeah, thank you, Pak Ferry. So basically, as I said, one of the best way that the government of Indonesia should be doing to handle the impending energy crisis, if you will, is by indeed by making sure that both sides are doing its best. One thing is the fact that on the fossil fuel side, so I'm not just talking about oil and gas, making sure that we have the best of fossil fuel exploration and development and production. Okay, and in order to do that, that you will have to do a lot of things. Yeah, improving the investment climate by changing the fiscal regime, even changing the contract system itself if we have to. Yeah, unfortunately, the regulatory environment in Indonesia is such to the extent that for you to be able to do that, oh, Pak Budi, you could do that. How could you adopt a tax-only petroleum contract system in Indonesia? We could not even do tax and royalty because of the oil and gas law. Yeah, well, guess what? That's what I believe we should do. If we have to change the law, then we should change the law for the benefit and the good of the country and the people. It will take some time. Well, maybe we should do something, quick, because if we work together, then we could do better than what we've been doing. The oil and gas law is supposed to be, revised and modified for the last 10 years, no avail. Anyway, maybe it is time for us to start speeding up the process and adopting this new thing. Yeah, a significant back to, as I said, changing small bits and pieces here and there will not be enough. And as I said, if something else is always better than import, then why should you still care about, is it okay for us just to, impose taxes, corporate income taxes on the upstream companies? Of course it is okay. All you have to do is regulate that once they start having discovery, development, and production, then the production will have to be prioritized for domestic so that we could significantly offset the imports. As long as it's a fair game in which the production supplied for the domestic market will be, compensated at the market price, then they would not mind at all. Whether it's export or domestic, they don't care as long as, it's fair. Yeah. So on the renewable side, the best way for Indonesia to help mitigate is, of course, by making sure that the renewable side is also very successful. Indonesia might actually have some of the best locations when it comes to solar power locations, yeah. In Nusa Tenggara, probably certain parts of Nusa Tenggara, and some of them have very good prospects of onshore wind or offshore wind with the new technology. So if you try to do your best on the upstream side, increasing domestic production of oil and gas, and unfortunately coal as well for now, for domestic, not for export, which is also controversial, but that's all about being fair on the compensation side, and renewable also increasing, then hopefully it would help mitigate. We will still have to import energy, but it would not be as catastrophic as the 7.5 million barrels oil per day, like what the RUEN, or the long-term energy plan, is projecting. Yeah, because it will be lower. Remember, RUEN already assumed that we will have to stop exporting coal at some point because they will have to be solely used for domestic. But even with that, you will still be on a negative deficit of energy. Yeah, so you will have to do both, and unfortunately, it's a significant effort by everybody, not just the government but also the players, yeah, the industry players. So it's not easy, but I believe it's better late than never. Today is actually a bit late because all these companies, the major companies, they're already shifting to renewables. Hence, the situation and the competition is already much worse than ever before. If it was 5 years ago, maybe it would still be competitive, but today it's very tight. But it's better late than never. Yeah. So I hope that addressed in general on the surface, because I don't want to dig into all the details, because this is just a virtual talk, supposed to be a 90 minutes conversation. Any other questions?
Yeah, actually,
or maybe an open question. Somebody.
Yeah. Yeah. Okay. So yeah, open questions. If you have any questions, please do so. You can raise questions.
Or maybe comments from the IPA or the board members of the IPA.
Yeah.
Because I noticed some of the board members are here as well. Probably the association could also say something about what we just discussed this morning. Because I believe this session hopefully would somehow, at the very least, trigger something. You know, even though it's just me as an individual, as I said, this is not representing the opinion of the IPA, but hopefully this would still at least trigger something, because, come on, this is for the future of Indonesia. Pak Bu Meti, Pak Ronald Gunawan, barangkali, if you would like to say something about this, or from probably somebody from SKK Migas, if there are. I noticed there are some officers from SKK Migas joining as well this morning. Ibu Meti masih ada ya? Itu Pak Ronald is on the line. Terima kasih Pak Ronald udah join.
Wah,
Hormatan.
mantap ininya Pak. Saya nggak ikut semua, tadi saya sempat keluar sebentar, cuma apa namanya, terima kasih Pak Mas Budi buat ininya, bagus. Kalau saya sih, saya pikirnya gini ya, apa namanya, last 2 years ini saya pikir kita mulai berbenah ke arah yang benar gitu ya, ke arah yang benar kan. We are moving to the right direction gitu loh. Cuma ya apa namanya, mungkin a lot of effort masih perlu dilakukan, terutama kan coordination sama interdepartment ya. Saya pikir teman-teman kita di SKK Migas, mereka udah sangat ini ya, saya pikir udah kerja keras gitu ya, tapi apa namanya, ya inilah, kalau koordinasi dengan departemen yang lain itu ya perlu mesti di continue. Makanya what I think now is we need to work together with other associations buat kita mendorong ini ya. Saya pikir There are associations. Jadi kita kan Kadin itu very strong. Kebetulan saya juga sekarang ikut ini juga ya di Kadin di oil and gas. Mungkin nanti Mas Budi saya bisa ngajakin juga tuh biar kasih pendapat ke Kadin ya, biar mereka juga.
My pleasure, Pak
Ya.
Ronald. My pleasure.
Jadi ya kita mungkin ya itulah kita akan dorong sama-sama gitu kan supaya menjadi kondisinya menjadi lebih baik ya. Tadi saya pikir poin penting itu ya. Nanti 20 tahun, 30 tahun dari sekarang itu oil and gas will be like tobacco ya.
Setuju Pak Ronald. Jadi if I may add to what you just explained, Pak. Yes, as I said, the government is trying very hard to continuously improve the fiscal regime, yeah, the terms and conditions, I would say, yeah. But the fiscal regime stays the same. What the government has been doing for the last 2 years, Pak Ronald, may actually be sufficient, even that is arguable, to catch up with the old competition. Yeah, when business was still business as usual. With renewable coming into play and all the complexities that I just explained in this session, and it's a totally different ballgame. Yeah, it would take a significant breakthrough, as I said, even a departure from the PSC contract system for us to be able to respond properly to this new upstream environment. That's why I think hopefully the government is listening to this, because I could see that very clearly with BP, with some of the other majors, that it's a totally different game. Jadi the government will have to realize this. And I'll be more than happy to keep advocating this, because I've been doing this for years, and it's free. You know, I'm not employed. I'm free agent. More than happy to help in any way whatsoever. Thank you, Pak Ronald. Ibu Meti, barangkali ya.
Ya, komen Budi yang terakhir bahwa yang pemerintah lakukan itu memang banyak, tapi itu sifatnya hanya untuk catching up dengan ketinggalan kita pada saat business as usual. Benar banget. Padahal ini harus much more than that, ya. Tetapi semua pihak memang sudah berusaha dalam 2 tahun terakhir ini menurut saya, ya.
Mbak Meti, we have audience, non-bahasa speaking audience.
Oh, okay.
You can switch to English, please. Thank you. Sorry.
I think we should be able for the government to do more if the government put a small team that really need to understand the situation in the world. Why I said so? Because usually it comes from the investor directly or by IPA. In a way that I don't think that we talk so open like what you did, right? Because, you know, the situation sometimes is not good to do that. But the government needs to have a small team which examine and then really understand the situation in the world. So like you mentioned, it is so difficult for the global companies to spend in oil and gas, yeah? Because different with the past, they now have pressure, yeah? So there should be something different. I worry that if that come only from IPA, then they will not, it will not be strong enough for them to make the argument or the decision, right? But if they have a small team that do this themselves, well, yes, helped by some other companies or the consultant, maybe they can make with a better and more radical decision. So you agree that we need to make a radical decision, right? Even though we thank you government for the 2 years, good progress. If I say good, it's just to catch up with the past, right? Yeah, but it's not good enough for the current situation with the energy transition, right? Not good enough. Okay, thank you.
Thank you. Right on point, Mbak Meti. Thank you.
Thank you very much, Bu Meti, as well as Pak Ronald. Before we close, just want to give one more advertise and also to offer to everyone. we are talking about CCUS. There will be a course called CCUS, and then it'll be Pak John Kaldi, as well as Pak Rahmat Sule and Pak Dodi Abdasah. We'll be giving a lecture, a course from 15 March to 17 March. So if you are interested in this, have a seat and then also register to Iwana. With that, then thank you very much, Pak Budi, and then thanks for everyone to attend this very interesting topic, and then very challenging things that coming up then to the next year. And then thank you again. Thanks for sharing. Thank you so much, then guys. Thank you. Have a good day.
Terima kasih.
Terima kasih semuanya ya. Mudah-mudahan bermanfaat. Terima kasih. Thank you so much everybody.